All right guys, welcome back to another video. Thought I'd do one outside today. You can see the gorgeous surf report going on. If I get this done quick enough, maybe we'll head out. So today's update, it's starting. We have seen new all-time highs in the US. That's the big one that I've been talking about now for years on the channel. The bull market's still on, the cycle's still up. US house prices have also been going up. It's all part of the cycle, the blow off top, and we're going to continue to see this upwards momentum. Before I keep going, hit the like button if you enjoy this type of video. I don't do it all the time because of course the charts aren't there as well, but it's sometimes nice to break it up because at the end of the day, the market's doing what it needs to do and it's kind of nice to have a bit of scenery. So like and subscribe if you're new here. Often it's basically in the office with all the charts and the data as well. So we did see the new all-time high for the NASDAQ. So the NASDAQ futures market touched a new fresh all-time high. The S&P 500 in the US is a fraction, less than 0.2% away from a new all-time high price. And this is off the back of the wars, the unrest, the uncertainty, the volatility, the fears of oil prices going to 150 bucks a barrel. You remember just 2 days ago, it's Wednesday morning as I'm filming this right now, in Australia of course, so Tuesday night for you guys in the US, and probably sleeping if you're in Europe. People were expecting $150 a barrel for oil as Iran threatened to close the Strait of Hormuz. They didn't do it, and of course some will say it's Trump, some will say it's Iran, some, whatever it is, right? It doesn't matter. At the end of the day, if you're trading price, that's what matters. You're watching the charts and you're following what the market is essentially telling you or doing. So looking at all the bad news, the unrest that we've just seen, the war, whether it goes on or it doesn't, you can see that the bad news has essentially been part of the wall of worry. So if you follow the channel, you know we often refer to the wall of worry. The wall of worry is essentially markets going up on bad news. That is a sign of a bull market. So we're still in a bull market. Bad news being that, well, obviously Israel bombing Iran, Iran bombing Israel. You could blame it on any number of things. And I think there's just a whole lot of distractions that continue to occur in the markets. Trump is absolutely amazing, master of distraction, but I will give credit to him, massive, massive, massive credit, more than what I think almost anyone else in the world is able to do, and basically just keeps going back to the idea of peace. Obviously he doesn't want human death. He's doing his absolute best. It's a tough situation, and I think it's doing relatively well for considering the circumstances. And we're at that phase of the fourth turning, the war cycle, things where the world gets much, much more turbulent. On the back of all that, so, you know, I kind of digress, but at the same time, it's part of the cycle. We still see all-time high prices. Now, on the back of those all-time high prices, we are starting to see, obviously, oil go down again. It did hit some fresh highs there at $70 odd, $75, I think, but is now sitting on support at 65. So it just had to wash out all of that hype from the buildup of war, and provided it's able to hold, then I think that's going to maintain. The reason I continue to express that, especially for the end of the cycle, and of course I know what many of you are watching is for, say, BTC, is that if these prices are able to hold over the coming sort of 6, 12 or so months, that would obviously lend its hand to inflation as well. So they are up from their lows. Obviously metals are up, copper is up, which is used in the economy a lot. Oil is up, even though yes, it's down over the last 2 days, but since those lows at $60 odd, it's up from that point as well. And in terms of where the US sits now, after we see these all-time high prices on the stock markets, the yields have started to come off a little, and the bonds have also gone up a little. But this will also be part of the problem, at least in my opinion, from my analysis, as we talk about these, you know, the peak of the cycle coming in, is that even if the US is able to drop those interest rates, which is what Trump obviously wants, I don't know if it's going to be for that long. And what I mean by that long could mean a matter of several months, and then they would have to go back up. It's looking likely that there could be a problem forming with the bonds in the way that the market or people who are buying the bonds may start to lose hope in it, and you're seeing the US dollar go down. We just had another near low close for the US dollar. So they're not finding that stability or that certainty in the US that they once had. And of course, the debt isn't helping either. So that could be part of the problem why the Fed would have to either hold the rates where they are, or if they do drop them to 4% or 3.75%, that they'll eventually have to put them back up in 2026. And that's been my view since, 2024. I put a post out on X giving you some forecasts. Take it for what you will. Throw that grain of sand or salt over your shoulder, right? But so that's what we're looking at when it comes to the end of the cycle. And you're already seeing those cracks form. And on top of that, peak of the cycle, blow off tops for the stock markets, S&P, NASDAQ, and we're obviously going to see Dow Jones eventually go up. But the main ones, they continue to hit new fresh prices. Now, what does that mean for the rest of the market? What should you do? Obviously, everyone's in a much individual situation. If you are serious about learning what to do towards the peak of the cycle and into the correction, check out TIA Premium. There's a link in the video description. We've got plenty of members there that are setting themselves up for this peak. There is a sale on this week as we end into a end of financial year sale here for Australia, but everyone gets that discount. So for Bitcoin, I still see high prices because we haven't yet completed the cycle in the case of BTC, but also in the case of the NASDAQ, which is the big topic for today's video, hitting a new fresh all-time high. In the past, or at least this cycle, Bitcoin's only 18-year cycle that it's been through, or going through, I should say, is that Bitcoin's usually hit an all-time high roughly around the same time the NASDAQ has hit a new all-time high. That doesn't mean that it has to happen exactly, it has to copy the same, and that correlation doesn't equal causation, so on and so forth. However, having said that, I still wouldn't disregard it because we haven't seen any reason not to accept the history that Bitcoin's followed the tech stocks, and now we see the NASDAQ at new all-time high prices. Does that mean Bitcoin has to be a new all-time high today or tomorrow? Of course not. I just need to say that because some people think that videos like this mean that it's a 24-hour thing that we're going to see new all-time high prices. That's nonsense. So let's put that aside. You guys are a bit more smart than the average viewer, I guess, on other channels that might be looking at 24-hour movements. We're in this for the longer cycles, and that's what works the best. So Bitcoin looking to those new fresh highs. I think that's still very well in play, especially as we look towards our Elliott wave cycle, dropping into the wave 2 and waiting for confirmation to come out of wave 2 into a massive wave 3. Where does that wave 3 take us? Anyone's guess? I have put out some price targets. I'm not saying they're predictions, but I'm looking at price targets. That could be somewhere around 130 up to 150 initially, and then we can reassess for higher prices. So I think there's still a lot of hopium left there for BTC. As for altcoins, one day up, everyone got really, really excited. You saw all the altcoin influencers pumping that we're on the ban of a new alt season. Maybe we are, maybe we're not. It happens like every single dip for the last nearly 3 or 4 years. I don't really see the point in that, but you do you. I'm mostly here for the longer term, looking at that Bitcoin cycle running out into the end of this phase. And I think NASDAQ has helped in the past. Therefore, I'll continue to watch it for this next, I guess, final phase of the move. And if the stock markets have further to run into 2026, that could be pretty strong signs for BTC, especially with everything else going on in the background, along with more companies buying up. You've got the Ponzi scheme in MicroStrategy continuing on, and we have everything out of the US, like what we just saw with Jerome Powell saying that banks are free to do what they want with cryptocurrencies. Literally just in the last 12 hours, he mentioned that, as well as him mentioning that we are not in a recession. That will come, but we're not there yet. I think there's still plenty more time to go. Let me know in the comments section what your thoughts are on this peak stage of the cycle. Are you starting to see how the 18-year cycle continues no matter what, no matter if it's good news, bad news, ugly news, surprising news? It just continues to power on. And this is Bitcoin's first cycle, so it's going to be, to say the least, quite interesting to see where this thing peaks out. Now, after the turn, that's where things are going to get a little bit trickier. I think running into that top, we're going to see even more exuberance with all of these companies and governments and so on, just adding Bitcoin to their balance sheet. More Ponzi schemes coming about, like MicroStrategy. It's essentially a Ponzi scheme. You need the money to buy Bitcoin in order Bitcoin to go up. If you don't get it, then it goes down. So that's basically the definition. You need to keep fueling the fire. So like it or love it, like it or hate it, that's essentially what it is. Let me know your thoughts. I'll be back with another video update tomorrow. It has begun a long time ago, but now we're seeing it again, the starting of that next move to the upside, as we've seen with the NASDAQ hitting new fresh all-time highs. Meanwhile, the rest of the market is still so bearish on everything. They're still very, very bearish about the future of the stock markets, and they look to the same high and say, it's a triple top, it's got to collapse. They've been doing that for years and have been wrong over and over again. One day they'll be right. I still don't think that timing is there. I love you and leave you again with some beautiful views here of Gold Coast. You can see Burleigh behind me there, and the just amazing winter's day here on the beach. All right, guys, if you're in the south in Melbourne, got to get up here for a holiday. It's amazing. All right, see you guys later. Peace out.